Hey, good evening. I'm Dan Fitzpatrick, stockmarketmentor.com, and it's Thursday, November 29th, and we're looking at Wednesday, November 28th here for Nordstrom. And here's why. Because the company, had reported earnings, and you can see what happened. The stock just absolutely got crushed for a couple days. Then it started to rally higher. Now, you can be buying this dip and all that, and that's, fine, but we can't go back that far. And so what I'm looking at as a trader is I'm looking for stocks that have been broken, not looking for high flyers. I'm looking for stocks that have been broken, and then they try to rally and kind of get back in the groove and then fail to do so, and I want to short them on the failure. And that's what we can do now with Nordstrom. And so you can clearly define your risk here. I've just kind of explained what my thesis is, that stocks down here on earnings, takes a couple days, finally finds a bottom here. And then it rallies up. Oh my gosh, it's up at the 200-day moving average. Great, that's the time to buy the stock, right? Well, it doesn't work out that way. The stock tapers off there, and now it starts falling below. So I'm looking at this as a short seller, as a well-defined risk, because I can be shorting the stock right here at 52.30, and then I keep my buy stop right up here, right above today's and yesterday's intraday highs, because I don't want to sit here and be short a stock that starts proving me wrong. I don't want to do that. I only want to be short a stock that's paying me off. And so the closer I can short a stock like this to the fail point, the closer I can be to that fail point where the stock moves up, tries to get above the 200 and doesn't do it, that's the better time to short. I mean, ideally, if I was looking at this, and obviously I wasn't, but if I was, ideally I would be looking at this morning, and then as the stock started to fall away, here, let's get up to present day, I'd be shorting it right into the morning. Again, I didn't do that, but that's okay, because we can still look at this and on this daily chart see that, you can be shorting this stock here and look for, $50 anyway. Deeper than that, I don't know. My admonition to people is always make sure your shorts are quicker than your longs. You always want to keep in mind that there's an upside bias to the market all the time. In other words, there's always buyers waiting underneath. The only question is, how high up are they going to reach? And so when you're shorting a stock, just know that as the stock falls lower and lower, there's going to be a certain element of traders who are going to be waiting to grab that stock. And so you have to be willing to take less profit on your shorts. But that would be my short for you. The high is 51.92 here. Is 54.65. So I'd maybe put my stop. I'm not even sure that I'd put it above 55. I mean, if this thing gets up to 54.70, then we're clearly wrong on the trade, and so we'd want to get out. So anyway, that's Nordstrom. See you guys next time.